Hi there. Good morning. Good morning, everyone. Welcome to our latest edition, or basically our final edition of Borak in 2023. This time we're back in Malaysia with our regional head of Equities Research, Anand Pathmakanthan, to give us the latest rundown on the Malaysian stock market third quarter results roundup. Welcome back to the show, Anand.
Hi, morning, Ajay.
Okay, just going straight and deep diving here. There's a lot to unpack, and I think the street is pretty much speaking about this. But how has the results this quarter fared against our analyst estimates?
Yeah, 3Q23 reporting was actually quite robust, quite solid compared to ours and street expectations. If you recall, the first and second quarters of this year, the results were relatively flattish, not much momentum. But the third quarter has really, moved very positively forward in terms of earnings momentum. So the numbers are quite impressive. Earnings were up about 6% year on year, 11% quarter on quarter. And for most sectors, we did see higher year on year and quarter on quarter core earnings growth, with the exception of petrochems. I think some sectors which really stood out, banks were very solid, up 16% in terms of earnings for the first 9 months of this year. Also sectors which were loss-making previously, like aviation, also gloves, saw their losses narrow quite substantially, more than we expected. And that's adding to overall market earnings growth.
Okay, that means that at least what we anticipated in the beginning, that optimism in the beginning, that it took a while, but it's finally here. I think that's the message that we want to convey to our audience. So that's interesting to see both the banking and non-banking financial sectors are still performing well. Okay, but that's basically what we've seen. Now let's look probably slightly in the future. Again, there is still the fourth quarter. Anand, is the research team still bullish on the prospects of those sectors that you mentioned just now for the final quarter and beyond?
Yeah, so 2024 is shaping up to be something to look forward to, I guess, for the market. When you talk about overall market earnings, 2023, notwithstanding what I just said about third quarter reporting being quite solid, for the overall 2023 earnings growth, we are not expecting too much, probably about 2 to 3% year on year. And you have some pretty severe earnings drag from sectors like petrochems, which I mentioned before, but also plantations, where earnings are down about 50 to 60% because of lower CPO prices. So I mentioned 2 to 3% growth in 2023 headline. But if you took away those two sectors, petrochems and plantations, which are a big drag this year, the underlying growth is actually about 15%. So you can see that earnings recovery is actually quite solid in 2023, despite that very low single-digit headline number. Now for 2024, we expect our research universe earnings growth to be about 15 to 16%. Very punchy. We are seeing earnings recovery across the board in terms of all sectors. And some of the sectors I mentioned earlier, which were loss-making, like aviation, we expect to return to profits in 2024. Gloves will come close to break even in 2024. And other laggard sectors, since the COVID times, like casino gaming, will see continued recovery in earnings in 2024. So you add those factors into generally positive growth across all the other sectors, including banks and utilities and telcos. You are looking at a 15 to 16% earnings growth in 2024 for the Malaysian market. So I think, so that's the background for Malaysia. But it's also important to note that our bullishness is not just, it's also about how the global landscape could potentially support a market recovery in 2024. There are three factors we want to consider. One is the fact that China has been quite disappointing in 2023 in terms of earnings and growth. But we expect some inflection to the positive side in 2024, and that will really help sentiment and filter through to earnings. Two other things. One, interest rates look to have peaked. We could start seeing cuts in 2024, and that's definitely good for asset prices. And the third thing, which is quite focused on Malaysia and Singapore to a lesser extent, is the turning of the semiconductor cycle. So last 2 years, we've had a lot of issues with oversupply, high inventories in the tech and semiconductor space. That now appears to be turning around. So 2024 could be very strong for the semiconductor sector.
Okay, that seems the way I look at this is that we've kind of persevered for 2023 coming to this point. Using your word again, there's an inflection point going also regionally, looking China, some of the sectors that potentially we have already seen the bottom, and they may be upside pretty much all the sectors that you mentioned just now. Okay, let's be a little bit more focused. Okay, we spoke sectors generally, but perhaps you could go by, I mean, say banks that you like, I guess some consumer names that you like that the team likes, so that we can go through that.
Yeah, sure. So let's start with the upgrades and downgrades in the third quarter. We did raise some ratings and cut some ratings of stocks, as we usually do during every quarterly reporting. In this quarter, we raised the ratings of some big caps from hold to buy. These include banking counter AMMB. We also raised Farm Fresh in the consumer sector to buy. Its operating outlook is looking much rosier given declining input costs and new product launches. Finally, we also upgraded regional low-cost airline Capital A to buy, as its post-pandemic earnings recovery is seen to accelerate in 2024.
Stocks we have cut in the results season. This is really in line with what I mentioned before. The petrochemicals were a big drag. Average selling prices continue to trend lower. So the outlook is quite cloudy for the petrochemical sector. We also cut Malakoff in the utilities sector to sell as well. Results were quite disappointing. We expect continued input cost pressures into 2024. And the third one is a consumer stock, Berjaya Food. We've cut to sell as well. I think higher raw material prices from the weaker ringgit is really crimping margins. So that could be a big impact on profitability in 2024, aside from top-line pressures as well. So those are just some of the stock rating changes we've made during the results season. Now, stepping back to your original question, what sectors, what stocks within those sectors would we recommend? A key recommendation remains banks. Banks valuations are low, very attractive. Dividend yield is averaging 5% or above at this point, so very high yield attraction as well. Some of the stocks we like: Public Bank, CIMB Group, as I mentioned before, AMMB as well is on our buy list now. Some other sectors we like: tech software, a sector that has been fairly neglected in the past, but we're seeing some good momentum in earnings growth next year. CTOS is one stock we like. And the other is IT Max, which actually has done quite well over the last couple of months, but we still see more upside on demand for its smart city solutions. One or two other situationals, I think consumer space, as I mentioned, Farm Fresh is a stock we like. And also in the auto space, I think Burma's auto, from a wider sort of consumer perspective, is attractive, not just on valuations, but this is one of the highest dividend yielding stocks in our universe, giving you about 8% yield with a net cash balance sheet. So very attractive for dividend portfolios. One or two other stocks I mentioned within the consumer sector would probably be Genting Group in terms of the recovery we are mentioned before. And finally, let's not forget the sort of the new economy sectors. One big one is renewables. We're going to put a lot of money into renewables in the coming years. So one stock there that we really like is SolarVest. We also have a buy on Saipa.
Okay, that's quite a bit, but I guess this is the third quarter. We still have the fourth quarter to looking to go through. But essentially, the message here for our audience is that coming back to the point that we may have bottomed and we have not seen potentially the full impact of 2023's earnings into all our stocks and our coverage, and it seems it's a little bit more positive rather than negative, apart from some of the specific sectors that it is probably a little bit challenged there. Okay, great stuff, Anand. I think this is something that we can give someone to keep takeaways. And for our audience, I'm just going to try to put a link up there to see all our, our top buys and sells that we have recently. So, okay, just one last one. Key risks in 2024. Basically, what are the external risk factors to our KLCI target this year, and what should we look out for?
Yeah, I think two key risks, not really very changed from the start of the year in terms of big macro risks. One is geopolitics. We've seen a deterioration in 2023 in terms of geopolitics, not just the Ukraine-Russia conflict, but also China-US. Those are conflicts which appear contained at this point in time, but the risk is, obviously there could be spillover and expansion of these conflicts, which could be quite destabilizing for the world economy. So something to keep an eye on. But at the moment, as I mentioned, those risks in terms of geopolitics appear quite contained. And in some cases, like US-China, we are sort of seeing some improvement in that relationship. The other risk is, of course, interest rates. Everyone is waiting for interest rates to start coming down again after the very dramatic increases over the last 18 to 24 months. But that could be derailed if inflation numbers remain stubbornly high. So if we do get, whatever shock that causes prices to remain elevated, be it fuel or food, then, those interest rate cut expectations could be delayed. In fact, there could be more rate hikes, which is something the Fed is happy to talk about. So, so those are the two key risks that, I would watch out for from an external perspective.
All right then. Thanks again, Anand, for coming on to the show and speaking to our audience, especially on the thoughts of after the post third quarter results wrap up. Talking about wraps and being festive and all that, it's a wrap for today. Remember, everyone, you can get our latest market news and research from our social media channels. We're available on Telegram, LinkedIn, and YouTube. So be sure to follow us there. If you're interested to find out how you can trade with Maybank, you can also reach out to our sales representative or apply for an account via Maybank to you using the QR code on the screen now. With that, thanks everyone for tuning in today's Borak session. This is Naguib for Maybank Investment Bank signing off. Thank you very much.
Thank you.
Thank you.
Do 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 do.